Hey everyone, welcome to the KE Report and a company update from Heliostar Metals. We are recapping yesterday, January 14th news release. A lot of information in this news release, simply titled Heliostar Files Technical Reports on Mines and Development Project Recently Acquired in Mexico. I am chatting with Charles Funk, President and CEO of Heliostar Metals. Company is traded on the TSX Venture Exchange under the symbol HSTR, on the OTCQX under the symbol HSTXF, and the Frankfurt Exchange RGG1. Now, Charles, there's a lot of information in this news release. It comes from three different projects: La Colorada, San Agustin, and San Antonio. Look, essentially their economics, 2 PFSs, 1 PEA, sensitivity tables, resource and even reserve estimates, and an overview of the plans moving forward, including comments on permitting. So I'm going to post a link to that news release in the show notes so everyone can read over all of these details. But Charles, just summarize this news release as best you can for us, please.
Yeah, you're right. It's a huge amount of work, an obligation for us to keep our reports current, and a lot of work to do for our team since we took over the assets at the beginning of November. I think to summarize what it means and what matters, the first is we're introducing the junkyard stockpile at La Colorada. That's going to drive production this year at La Colorada, and we'll put out guidance in a few weeks this will support. Secondarily, it shows the future of La Colorada. We think we can expand, we can demonstrate with this report now that we can expand it to a 50,000 ounce a year gold producer. It shows at San Augustine, should we get the corner permit, that there's a lot of cash flow that we haven't talked about, that both will go to our bottom line and also pay for rehabilitation, which was one of the perceived risks of the transaction. And then thirdly, San Antonio is an incredible project. Should we be able to permit it in Baja, low capex, $250 million return at today's gold price. So short-term production guidance built off these resources, medium-term strategy and long-term optionality would be my summary.
Okay, well, let's start with the here and now then. La Colorada, as you mentioned, this junkyard stockpile, it was brought up a number of times in the news release. However, it doesn't look like it really filtered into some of the economics around that La Colorada asset. So explain how we should be viewing those detailed numbers on La Colorada.
Yeah, it's a funny one when you look at a tech report. It's close to what we'll do operationally, but it's not specifically what we'll do operationally. So it's the basis for us to talk about. So what we plan to do this year is, for those who know La Colorada, been mined for a long time, went into care and maintenance in late 2023 and produced gold from residual gold stacked on the leach pads. And so what we started this week, and we announced that we were doing that in December, is we've restarted processing at La Colorada. We're moving material from a stockpile that was low grade historically, that today makes good money at these gold prices. And so that started this week, and we expect to produce in the order of about 20,000 ounces from what's in the tech report. But an interesting quirk is there's a component of inferred resources that we think we will mine and produce additional upside beyond that once we've done a bit more work. So junkyard will drive La Colorada's production this year. And then from next year on, we'll look at the expansion and going in and expanding the Creston pit. There's nearly 400,000 ounces in reserves at La Colorada that we intend to mine.
So when it comes to additional capital needed here, can you give us a general explanation, even ballpark numbers on what it's going to cost to move La Colorada forward and then even bring in San Agustin at a later stage?
Yeah, so La Colorada, let's break it into two pieces. There's effectively zero capex and just the working capital cost to produce from junkyard, and it's going to generate some pretty significant cash flow for us this year. Then we have to expand the pit at La Colorada, and the tech report shows a 53 million capex with stripping ultimately a bit over $100 million at these gold prices. But what we recognized and what we've talked to our shareholders about is we think that the resource is going to be bigger and more importantly, that there's going to be shallower gold ounces shallower in the pit. So right now there's 5 drill rigs turning, and we're going to update the tech report to a feasibility study in the middle of this year. We think that at La Colorada will demonstrate an expansion opportunity to 50,000 ounces of production that's going to have something in the order of a 50 million, plus or minus 20 million capex, and a better NPV than this study shows. But let us do all that drilling. We put out some good results in December. We'll have some more results shortly. We think will further improve the economics for the expansion at La Colorada. So we go from junkyard, no capital, good cash flow, to an expansion that'll take capital and move La Colorada to a long mine life. You touched on San Augustine. San Augustine, we haven't really talked about, it went into care and maintenance late last year. We've got residual gold leaching this year, but we've always known, should we be able to permit a zone that we call the corner permit, that there's 1 to 1.5 years of mine life that generates a lot of cash for us. And this tech report shows that. We generate nearly 40 million of cash flow, 25 million of NPV at spot gold prices with a 4 million capex. So it's a very attractive stepping stone for us, and we expect to get that permit this year, and we'll use that to trigger a restart at San Augustine. That's all upside. None of that we've ever guided, none of that we've ever talked to our shareholders about. We think it provides a lot of upside should we get that permit this year.
Okay, San Augustine, yes, it's smaller, but okay, that can generate some nice, at least short-term cash flow for you. At La Colorada, then, that sounds like very much this near-term focus and ramp up of production. Do you know if you're going to have to go back to market for any of these costs, especially that note in there about the potential costs just to get to during pre-stripping?
Yeah, I think the great thing about our business right now, and we'll see it when we put the Q4 update out, is we're a cash flow positive business, and we're recycling that cash into these long life opportunities at La Colorada and Ana Paula. So what we've stated is we'll need 2 lots of capital over the coming 12 months. We'll need capital for the expansion at La Colorada and capital for the construction decision at Ana Paula. So the reason we're pushing so hard with the 5 rigs at La Colorada now is we think we can materially move the capital materially reduce the capital for La Colorada, and we'll know that by late June, early July. And so I'd say we'll need something in the order of, give me a wide range, 30 to 70 million ultimately. And so we'll be able to fund most of that with debt, and a small amount of that from either an equity raise or warrants. We have nearly $10 million of warrants that are in the money. So there'll be a small, there's potential equity required in the middle of the year, but not a significant quantum relative to our market cap. And then we'll make another decision at the end of the year on Ana Paula, and we've got to get that FS out on what's required there. And that's what's been really nice about buying this portfolio. Capital for the junkyard at La Colorada, very low capital for San Augustine should we get that permit, to a small capital step for La Colorada expansion. And then in the scheme of things, not a huge capital step for Ana Paula. So we're growing to a mid-tier gold producer without hundreds of millions of dollars dilution to our shareholders.
Yeah, well, let's remember too that you paid, I think it was $5 million for these assets. So yes, you need to put some money into them, but it does very much seem like these assets will be making money, even are, I guess, currently making money. We'll see by some of the Q4 results. Can you talk to us about the sensitivities though? Because most of the base cases, either $1,900 or $2,000 gold, you bump a lot of those numbers up in those sensitivity tables to $2,600. Give me an idea of cash flow numbers with the sensitivity considerations.
Yeah, so it's actually, before I do that, where one of the most interesting things from my perspective is, most consensus study forecasts are somewhere around the 3-year trailing average for the gold price, and that's what we used. And so that's between 1,900 and 2,100, depending on how conservative or optimistic you want to get. And so that presents base cases that historically have never been more disconnected from today's gold price. You're talking about $600 or $700 differences between the base cases used in these tech reports according to the standards and the reality of what we're selling our gold at for today. And so it's making the sensitivity tables really important in these studies. And for example, Like if you take the La Colorada example, it has an NPV of around 25 million at $2,000 gold and well over 100 million at $2,600 gold, which is lower than today's gold price. So it's really important for us to present the economics today because that's the environment that we're making these decisions in. What I think the average shareholder should take out of these is all of these projects make money at very conservative gold prices and they make a lot of money at today's gold prices. And that's why we're so happy with the results of these studies.
Charles, is the key point here also because these assets are largely built, that they have been operational, many of them in the past. So that's what's helping keep, well, let's face it, kind of lower grade assets here profitable for you?
Yeah, I think. Well, even if you look at these, they're not low. San Antonio, I think, is fair to call a low grade asset. We're talking about point 0.8, point 0.9 gold grades for the Creston pit in an oxide open pit. So, what I think, if you summarize the big picture for us, we are building a mid-tier gold producer. We did possibly the deal of a lifetime last year, given equity market sentiments and Mexico sentiments that's both are turning around. And we're moving from short-term production from the likes of residual leaching and stockpile. We're investing the profits of that and potentially new capital to bring on long life assets. And then we'll bring on new mines like La Colorada and potentially San Antonio. So we're moving from a very low cost base to we had very short-term viability. Now we're presenting medium-term liability, and these tech reports lay out our long-term growth. And that's a pretty exciting trajectory for our shareholders.
So you mentioned again that attitude, the sentiment around Mexico, and as I said on the intro, you do have some comments on permitting, as many of these assets do need certain permits to move forward, especially San Antonio. Talk to us about the permitting landscape here, what needs to happen in the near term at either any of these assets.
So the great thing about what we presented at the junkyard is we've started. We didn't need any additional permits, and that work started at the beginning of this week. We will need some minor permit changes, but we've got the bulk of the key permits for the La Colorada expansion, and that's what we'd always talked about as one of the drivers of the investment decision. We've always treated San Augustine as free upside, that we weren't building into our base case or the reason that you should invest in Heliostar. But we're making progress and we do expect to get that permit this year. The new presidency has been a marked change in attitude, and you're seeing that with the increase in share price of Mexican mining companies. And I think you'll continue to see that over the next 3 to 6 months. It's under the new president, Mexico's got a much better place for us to operate as miners. And so I think now you can start to think there's a good probability that we would bring San Augustine production on this year, which I've never said before because I wasn't confident we could do that. The ability to permit is improving in Mexico, and we just need to see the first of those pit expansions granted, and that'll give a lot of confidence to the investor to invest in companies like Heliostar.
Okay, so again, I'm going to post a link to that news release. I really encourage all of you listening to read through it. It is a long news release. Send me any notes or questions you have on any of the individual aspects, and I'll get Charles to address those. Charles, summarize for us then what comes next for the company. I know you needed to get out all these reports, but now that you've restarted La Colorada, you're mining right now. What news will drive the stock and should investors be paying attention to?
Yeah, we've got a lot of news to come now that we've done the regulatory requirements for these tech reports. We will have additional drill results from the Colorado shortly. We will have 2025 production guidance in January. We'll have additional drill results from Ana Paula coming out. We will also have the Q4 quarterly showing the production and the profit that we generated in that quarter. So we've got a lot of news coming. We've got, the way I break it down to is showing how much we can improve La Colorada over the next 6 months, show how much we can improve Ana Paula and deliver the feasibility over the next 12 months, and broadly grow our asset base. Every one of the resources at all of our projects is open. And as we deploy the cash that we're generating, we look forward to showing that the assets we bought have longer mine lives than people thought. They just hadn't been invested in. And we're really, really changing our internal attitudes and then the shareholders' view of that in light of investment and high gold prices.
All right, Charles. Thank you very much for giving us more of an overview of that news release. I'm sure I'm going to get some questions in on that, so I will probably follow up with you in a few weeks to dive a bit more into these numbers and cover any other news that comes out of the company. Again, Charles Funk, President and CEO of Heliostar Metals. Charles, thanks for your time today.
Excellent. Thanks, Corey. Thanks, everyone.